Hi, everybody. Welcome to CPI Day, January 11th, 2024. We got the much anticipated CPI report for inflation from December, and it came out a little hotter than expected. And it was a little bit of a surprise, especially in a couple of the areas. So I wanted to take a few minutes here, break down the information and a couple of other pieces of noteworthy items for today. So CPI, Consumer Price Index, came in at up 0.3% month over month, higher than the 0.2 that was expected. So CPI closed out 2023 up 3.4% versus the expected of 3.2%. So core CPI, which strips out the volatile food and energy, also rose 0.3% for the month and 3.9% from last year, so year over year. Now, compared with the estimates of up 0.3 and year over year up 0.3%, also came in a little bit hotter than expected. The year over year core reading was the lowest, though, since May of 21. So there's some positive news coming in. It's just a little bit of a surprise that it was up this month. Now, the big reason, much of the increase came from higher than expected shelter costs. We thought we'd actually get some help here, but it actually hurt us. That category rose 0.5% month over month and accounted for more than half of the increase in CPI. On an annualized basis, shelter costs are up 6.2%, which is about two-thirds of the rise in total of inflation. The raise in shelter costs was really a big surprise, and it did cause us a little bit of trouble in the bond market today. Food prices increased 0.2% in December, the same as in November. Egg prices surged 8.9% on the month, which is a huge jump. Energy posted a 0.4% gain after sliding 2.3% in November as gasoline rose 0.2%. The good thing is natural gas declined 0.4%. Airfares increased by 1% last month. So what was the cause of the energy increases? Well, that goes back to the shipping problems that we're having right now in the Red Sea with attacks from the Houthi on different shipping companies that are going through there, and those companies now having to navigate a much longer road down through the Cape of South Africa. So this is putting significant pressure on energy prices. In fact, earlier today, there was another reported attack. The Confederation of different countries are trying to put together a more broad coalition of task force to keep shipping lanes open. So the issues in the Red Sea are ongoing, and now, as we talked about, a couple of weeks ago, they're filtering through in gas and oil prices into inflation. So this was something that we thought could happen, not a huge surprise, but not as much of a surprise as the shelter costs. Um, Now, other key price indexes, motor vehicle insurance, once again increased 1.5%. Um, Medical care accelerated by 0.6%. And used prices, a key contributor of inflation, last couple of months increased another 0.5%. Now, this was after being down 1.6% in November. So there's a couple of categories that definitely hurt us. Yesterday, we saw the New York Fed President, John Williams, who is a permanent voting, well, I should say the New York chair is a permanent voting member on the Fed policy, said Wednesday that inflation clearly has abated from its near 40-year high in mid-2022 and is making solid progress, but he gave no clues on when he thinks rate cuts could be appropriate and I'm sorry, instead that indicated that restrictive policy is likely to stay in place for a short time. Definitely on that hawkish side. Other officials, Fed Governor Bowman, our favorite Fed governor, and the Dallas Fed President, Logan, also expressed skepticism and said they won't hesitate to vote for higher Fed rates if inflation turns higher to the positive. Uh, so we're taking it at a 10 a little bit today in the bond market. We're up past 4.08. Mind, a week and a half ago, we were down at 4.76. Spike in 10-year treasuries, which have raised interest rates probably quarter to 3/8% in that range. In other reports today, the Labor Department showed that initial jobless claims were little changed at 202,000, which is slightly below the estimates of 210,000. So, tomorrow we get the producer price index. Hopefully, we can get some of the loss today back tomorrow, but we'll keep you up to date. Give us a call, 616-293-2189. We're happy to go into more depth on this information. Post some questions if you have it. If you could please like and share our videos, that would be much appreciated. Have a great afternoon, everybody.